want an exposure to a market or an
Everything they need in one place.
The world's foremost authority on individuals, advisors and institutions.
Hello and welcome to the Morningstar series, Market Reaction. I'm Emma Wall and here with me today is Gerardo Rodriguez, Portfolio Manager for the BlackRock Emerging Market Group. Hello, Gerardo.
Hello, how are you?
Very well, thank you. So we're running an Emerging Markets Week this week, and one of the things that we're increasingly finding in our studies is that emerging markets, once considered a homogenous group, are increasingly not so. The things that drove the emerging markets to profit over the last sort of 15 years are actually not the things that are going to drive profits over the next 15. Is that correct?
That is correct, and markets have been struggling for the past 2 or 3 years, especially equity markets, because as emerging economies evolve the income curve, it has become a bit harder to continue growing. Once you get beyond certain point of income per capita, in order to continue growing, emerging economies need to have a strong structural reform agenda. And doing that and having that agenda passing through Congress is not that easy. So this nice pool, driven mostly by China, commodities boom, and also a reduction across the board in trade barriers, basically pulled economic growth in emerging economies and had asset prices perform very well from the period from 2000, say, to 2012. Since then, things have been becoming a bit more challenging.
And those drivers, as you say, of commodities, of exports, those aren't going to drive the next profits. So it's about reform. China putting reforms in place at the moment, India with the new Prime Minister putting reforms in place. Who else is getting it right? Who else is ahead of the curve, perhaps?
Absolutely. So we're living in a world in which countries, for the most part, are growing below potential. So this pull from exports is not necessarily going to be there. That's why this issue of reform, of structural reform agenda, has become more important. Clearly, China has signaled a transition from an investment-led to consumption-led growth. There are still a lot of question marks out there with regards to the shadow banking, property markets, the credit boom that has driven economic growth, and how to transition that is still something that we have to see. Mexico, I think it's one of the countries that is at the top of the list from a structural reform agenda. Constitutional reform has been passed through Congress already, secondary legislation, same thing. So it is now the implementation process that the government is going through. India is another example with a new prime minister, very energetic, trying to get things done. A lot of new initiatives on the government, on how the government is functioning, are already in place. We have yet to see if the government agenda has a congressional expression of a structural nature as well. There's some questions in the case of Indonesia with a new president there, and what type of reform agenda he can push through Congress in a context in which things are a bit, say, complex given the composition of Congress. Certainly, there are other countries that have been struggling from a macro perspective, but have just finished an electoral cycle, like Brazil, in which we have seen a macro deterioration over the past few years. We have yet to see the appointment of a finance minister there and the willingness of President Rousseff to actually change course from a macro perspective. So as you can see, there are not that many examples of countries doing what's good for the country medium term, even though that has political cost over the short term.
And what about Europe then? You've touched on LATAM, you touched on Asia. You know, Europe and emerging Europe is a big part of this emerging market sphere. Are they getting it right?
So that's an interesting question, just because of the secular dynamics in which the Eurozone has been evolving over the past few years already, and now the deflation fears. We're at a point in which monetary policy divergence in the developed world is becoming a key element for, say, market dynamics. Clearly, the US in the process of normalizing monetary policy, while Europe and certainly Japan moving in the opposite direction. So from a global financial conditions perspective, those countries that are more associated with Europe in the periphery may be in a better position, say, from a market dynamics perspective. So actually, some of the countries that we like have to do with, say, emerging Europe.
Gerardo, thank you very much.
Thank you.
This is Emma Wall for Morningstar. Thank you for watching.